Righto, buddy miners, we've got a bloody legend from across the ditch here, Mr. Warren Irwin from Rosso Asset Management. And how we say it in Australia is, wazza! How are you, cobber?
I'm doing great. So are we going to have Trav as the translator here?
Yeah, he's the translator. Yeah.
All right, good.
Mate, what's it before we get into it, mate? You're our boots on the ground over there. I'll tell you what, if anyone over there's doing any exploration drilling and they're not using Axis mining technology, gyros or ORIs, go give them a bloody uppercut for us, mate. Get the North American bloody users onto it.
Well, I reckon, this one takes us down a bit of a trip down memory lane, fellas. Warren was our first guest on the show over a year ago, and there's a few topics that I think we should touch back in on because they've become even more in flavour as sort of time's gone by. So things like resource nationalism, Canada and the rules around M&A and these sorts of things, that's come back in fuego really, in the last week or so, but in particular in the last months, it was sort of warming up, going from just affecting China to a more global kind of outlook there. And then you've got all the sorts of commodities. Warren's got some hot takes on uranium, been a long-time investor in the space. So there's a lot for us to kind of get through. But I want to start with Canada, M&A, the rules that as a country they've been put in place to kind of protect their national champions. And I want to hear from you, Warren, how this has sort of gone down. You're based in Toronto. You are, I think, one of the longest running natural resource funds in the business. So I want to see and hear from you what sort of the changes that we're seeing in the past couple of weeks and months in Canada, how they sort of play into the longer term cycles that you've been a part of in the mining industry.
Yeah, it's been generally the government's left us alone over the last many, many decades that I've been involved in it. But recently the government thought it'd be a great idea to start interfering. And as you know, when governments start interfering with a business or an industry, bad things happen, right? So the biggest concern we have these days is I think what triggered it was when we had neolithium. I was an early seed investor in neolithium. It was an outstanding lithium play in Argentina, and it was sold to the Chinese, and it was a Canadian company sold to the Chinese. And the Canadian government took offense of that, and they somehow think they have extraterritorial rights to control who owns a project in Argentina. So that sort of spurred things on. And now if you're a critical metal company, you cannot basically sell to the Chinese. Whereas, Dan Earl of Solaris found out recently, you can't even take an equity investment from the Chinese, even though, frankly, capital is tough to come by, and there's no Western companies interested in investing a lot of the juniors out there. That the Chinese have been a big part the last number of years in the junior capital markets in helping, raise money, get mines built. And now the Canadian government somehow thinks it'd be a good idea to stop all that. And the problem with that, there's nobody to take their place. And the Western companies are not there to start buying up these juniors or helping fund the juniors build out these projects. And the ones most susceptible, I think, are copper porphyries, because they take so much money to drill up and they take so much money to build. And that's where the world needs the most help from the Chinese to get these into production. But the Canadian government doesn't seem to think that's a good idea.
Yeah, how many porphyries are in Canada? Is there many up that way?
Well, it's not really even Canada, right? Like Solaris, it's an Ecuador company, and we've also got Filo has got operations in Argentina, and looks like they'll get probably picked off by Lundin Mining and BHP. But the porphyries, Canada is a very, not unlike Australia, we're very international in that not only do we find a lot of mines in Canada, but we're global leaders in exploration. We're very active along the copper belt in South America. And as you know, to drill out a copper porphyry takes a ton of drilling, and it takes a ton of capital. The capital markets haven't been there, but the Chinese have been willing to invest in copper porphyries and help move things along and eventually buy them and build them. And the problem we have, if you take a look at the big copper producers globally, BHP, Rio Tinto's, Freeport's, that are Western companies, they haven't been stepping up to the plate and buying a lot of these juniors where the Chinese have been. So we're kind of in a bit of a pickle where, when somebody pitches me a copper porphyry deal, I go, why would I ever invest in you? Because nobody could buy them. And even if there was a Western miner who could buy them, then there's no competitive tension because they know that they're in short supply and that the Chinese can't bid against them. So what I see happening here, we'll probably get a change in government next year in Canada, which I think a lot of these rules will be reversed. But meanwhile, I think a number of people who are anywhere near, monetization event will be re-domiciling outside of Canada, which once again hurts Canada and doesn't do anything for whatever the Canadian government's trying to accomplish with these rules.
So is that even though Lundene's got all the power over that Vicuña district, is the only way BHP would have got in with them into that area anyways through Lundene, because they need the Lundene Group to satisfy these new potential Canadian laws?
I don't think, frankly, I really don't, I'm not 100% up to speed on that, but I deal with, BHP fairly regularly, and I know the Lundenes for decades, and I've also been to Filo's property in the top of the Andes there. So frankly, I don't think the Canadian government would have any problem with Filo being sold to BHP. And the problem with a lot of these rules, they're trying to protect Canadian mining, but the horse is long gone out of the stable, right? When they sold Falconbridge to foreigners, they sold Inco to foreigners, they sold Inco to Vale, right? They sold Falconbridge to Glencore. Now Glencore just bought the choice assets of Teck. So what else is there in Canada? There's of any significant mining companies, there's very few. The only miners that are left really are the gold miners. And gold, in the Canadian government's view, is not a strategic metal for whatever reason. I don't know what to them is strategic or non-strategic, because, I know metals that should be strategic, but they're not. And then metals that they consider strategic that I don't think should be. So it's kind of a huge mess. And for a guy like myself trying to invest in this market, it's really making an already difficult business even more difficult.
When you look at like the guidance that came out when Teck's Elk Valley resources assets were recently kind of approved by the Canadian government to be sold to Glencore, the guidance was that we'll only be selling these M&A the M&A the mining leaders in the most exceptional of circumstances. So it's the exception, not the rule, that these sorts of transactions would be approved, or at least for the current government regime. Like there's got to be some pretty big implications for the entrepreneurial kind of mining company about choosing where they want to set up the company now as a result of that.
Absolutely. I'm not sure if you followed me on Twitter, but I got in tons of trouble back January, February this year. I went out and I tweeted that that Solaris their investment by Zijin Mining was going to get turned down by the Canadian government, and everybody was all over me. How would you know this? Blah 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 blah. Well, anyways, I found out. So then Solaris phones me up. So Warren, this is Dan Earl. Warren, the Canadian government has told us they have not made a decision yet. And I said, well, they could tell you what they want, but for my sources, they've made the decision. They're not going to allow for this investment. So that was kind of good for Dan, because Dan was able to just pound the table as hard as he could and get as much clout behind him to kind of get things going in Solaris's favor to allow for this Chinese investment. In fact, one of the things during the PDAC in Toronto, the president of Ecuador actually came up and met with Trudeau. And I'm sure, I wasn't in the meeting, but I'm sure that would have been a topic of conversation. But sure enough, at the end of the day, Solaris couldn't take their money and they went on with other options. So despite all the work Dan did to try and, keep the Canadian government happy, it wasn't enough. And even with the president of Ecuador coming up to Canada to try and encourage this investment into Ecuador, it was not something that they wanted. And it's really funny because, again, this is an Ecuadorian copper project. And what is the Canadian government? What control do they have? What control do they think they should have over the entire world? And who should own? Like, should they have a control over who should own projects in Ecuador, or should the Ecuadorian government? And I'm sort of the view, if the Ecuadorian government doesn't want the Chinese. That's their decision. But they do have Chinese up and operating copper mines in Ecuador, and they seem to be pretty happy with them. So it's totally baffles me as to who would have pushed this agenda forward with our government and why it's even in place. And hence, Canadian juniors have no choice but to re-domicile. So anybody who has any hope of selling to the Chinese will re-domicile outside of Canada, making our Canadian industry even weaker. So it's kind of wacky. That is for sure.
So Warren, one of the other deals that we'd heard a bit of chatter about was Rio potentially going after Teck. Now that's the Teck, obviously, with all the copper assets now that Elk Valley's sort of been spun out. What sort of odds did you give that one of going through?
Oh, oh man. No idea. Like who knows? You know, the rules are, you're relying on the government making a decision based on a policy that doesn't make sense in the first instance. So that's a tricky one. You know, Rio's active in Canada already. A lot of them, you know, BHP's active in Canada. All these guys are active in Canada. Same with Glencore and Vale, and all of a sudden, I don't know what this policy would say to that. It would be a shame for us to lose Teck, because it's good to have a Canadian office Canadian head office in Vancouver. I guess what they'll do is not unlike what they did with Glencore, and make sure that the Canadian offices stay here, if that helps at all. But the leadership is outside of Canada for sure, with respect to any strategic capital allocations and things like that. So it's I have no idea whether Rio would ever be allowed to do that. And Teck is kind of an interesting company. If I was running Teck, I would not in a million years have ever sold their Elk Valley coal. It was just, you watch their cash flow just plummeting like crazy now. And, you know, Glencore, not sure if you guys have been following it too closely, but it had been their intention to create a coal division, like Glencore Coal or whatever they're going to call it, and spin it out from Glencore.
Not going to happen. No.
Do you know why it's not going to happen?
Well, I think it was just like a bit of a bargaining chip to kind of get the Kevils on board in the first place, and they're going to pull the shareholders. But I don't think there was ever much desire internally at Glencore to ever spin it out. But it was just a talking point to kind of get the deal with Teck over the line in the first point.
Well, perhaps. I just think that if they ever did it, I would be lining up to buy their shares. Like, can you imagine Glencore running a met coal and possibly some thermal coal in there too? But metallurgical coal, the next 20 years is going to be a fantastic place to invest.
Do you know what's amazing, right, Warren? I was thinking about this literally in the shower today. It's like every like major miner was just in a stampede to divest their met coal assets, and they were so scared, they were so worried that they were going to get like massive capital flows divested from them if they didn't meet these strict ESG kind of thresholds that were mostly thrust upon them by the Norwegian Sovereign Wealth Fund, right? And now you look at it, and Glencore's just said, "Yep, I'll take that, I'll take that, I'll take that." Like sopped up some of the best assets out there, and guess what, mate? Glencore now trades it like that. Glencore's run hard since year to date, and it actually trades at a premium EV/EBITDA multiple to Rio Tinto and BHP right now, right? So these fucking stupid miners that were out there thinking, I want to avoid the D rate, now are literally on a relative basis D-rated to Glencore. What fucking geniuses.
Well, here's my favorite is what I'm sort of a believer that there was some intention, I don't know how much, to spin off and create a Glencore coal. I think that would be a fantastic vehicle for me to invest in. I would love to own it. But I think the reason the shareholders of Glencore don't want that to happen is because a number of the shareholders could not invest strictly in a coal project, a coal mining company. They would be chastised for that. So they're going, well, hey, don't pull a Teck on us here and spin off all your big cash flowing assets and all this tremendous upside in the met coal market. And because we cannot invest in it because of our ESG mandates. So I think they'll be trying to protect that coal cash flow like crazy and keep it within Glencore. I could definitely see why they want to do that. But I would so dearly love to have a met coal champion run by the smart guys at Glencore. It would be a fantastic company to invest in. And it reminds me of back in the day, you guys are probably too young for this, but back in the early 90s when all the do-gooder, the ESG of the time do-gooders were saying, well, we won't invest in tobacco companies. And man, over the next several decades, so much money was made in tobacco for people who could. It was unbelievable. Whether it be Philip Morris or any of the big guys made a fortune in tobacco over the next several decades because all the do-gooders who had these mandates couldn't invest them, and the dividend yields were huge. The dividends paid out were massive, and a lot of money was made. And I see that possibly happening here for any standalone coal producer, especially met coal producer, because met, there's no hope that they'll have a substitution for met coal in the next several decades, in my opinion.
So Warren, as far as I understand, the only coal name in your portfolio is Colonial Coal. That's what I've sort of surmised from my research. Why haven't you picked up the likes of an Alpha or Warrior, or come down to the ASX for some of the exposure down here in amongst that sort of bullishness that you've got for the commodity?
Yeah, well, even me, there's only so much met coal I can own in my portfolio, and I'm choking on it right now. I have lots. Like I bought Colonial Coal at 15 cents with a 30-cent half warrant, and now it's at 260. So I haven't had any room in my portfolio to add additional coal exposure unless I sold Colonial, and I don't want to sell Colonial. But when Colonial gets sold, and it may get sold pretty soon here, but who knows? I'm going to take all that money, and it would be really tough for me to take that money and put it in anything other than met coal companies. Like I was thinking Alpha Warrior, and then hopefully by that time Glencore will figure out whether they're going to spin off a coal division or not. But those would be my three. I'm going to roll up my sleeves pretty hard and get into. But met coal, man, it's going to be a fantastic place to be, because I was bugging a number of my friends recently about, okay, when was the last time you were pitched a junior exploration company that was going to explore for met coal?
Not in my career.
It never happened. So you've got a demand trajectory, right? Like India is looking in the next decade to double steel production. They're one of the biggest users of met coal, and they're going to double production. Like the demand growth in met coal is extraordinary. And guess what? Nobody's looking for it. And there's pretty much three major regions in the world where you could find high quality met coal. And, it's an interesting place to be. And people think met coal is going to get phased out. It won't be phased out. This whole full cycle hydrogen stuff is not working. And we've been making steel with met coal for at least 100 years. And it's not going to be an easy thing to change. Like I wouldn't want to drive across a bridge just built out of steel with some new process that doesn't generate CO2. I would rather generate a bit of CO2 and take, and have high quality bridge. But I'm really bullish on met coal. It's a place to be.
God, that'd be the funniest thing ever if we start seeing met coal exploration companies. Like, that is something I would never thought I would have ever said.
Well,
but why wouldn't there? Why shouldn't there be?
Because you can't build it.
Well, no kidding. Like so. I take the piss out of my I'm optimistic on uranium. Okay, but that means I'm a bear to most people, right? Because they're all $200 uranium. I'm saying, guys, compare the number of uranium juniors looking for uranium, and remember all the uranium that was still in the ground from last cycle. Everybody's looking for uranium. There's tons of projects that are still kicking around from the last cycle. Demand, you can't build nuclear reactors super darn fast. And you compare that metrics to met coal, where you've got nobody's looking for it, nobody wants to own the stocks, and demand for it, certainly in India, is skyrocketing and just rocking and rolling. These steel companies are expanding like crazy. And I'm not sure if U.S. steels, people are trying to buy U.S. steel. They'll jam a ton of money in there, expand capacity. There's just a bid this morning from Cleveland Cliffs, just trying to buy Stelco, a big Canadian
100% premium, 100% premium.
Yeah. And what they're going to do too is, if you look a little deeper, they're going to crank up a ton of capex into that company, and they're going to just crank up production, right? So all these steel producers are cranking up production as we speak, and the demand is increasing right there in front of us, and nobody's looking for it, and it's just sitting right there for all of us to see, and nobody wants to own the stocks, and nobody wants to finance any juniors looking for it. It's exciting and interesting sector, and I love it because everybody hates it. So that's another reason I kind of like Matt.hall. Yeah.
So Warren, we kind of we touched on the met coal ownership from the corporate level, from the company level, and there's kind of been some sort of changes over the past few years. But do you actually see on the other side of the table where you sit with the fundies and the buy side, any change in ESG policy or whatever you want to call it around tweaking the mandates and allowing them to, say in 5 years actually invest in these sorts of things? Is that something you can foresee at all?
Well, right now you're already seeing, was it BlackRock shut down their ESG fund because it wasn't making any money? Like I've seen these specialty funds with do-gooder intentions, and they've never really ever performed. So it's just a matter of how long can investors stomach subpar returns by trying to follow a mandate that doesn't make any sense. So it's happening already, and I think give it 3 years, I don't think we'll see an ESG fund around, because people look at the performance and go, okay, you've got the cheapest sector of the market right now is oils and metals and base metal, just basically resources. The cheapest sector. Compare it to any of the tech stocks, right? And it's the cheapest sector to be. So someday we're going to have our day in the sun. We'll make a ton of money, and the poor ESG guys will be sitting there missing the whole party. That's for sure.
My favorite instance of kind of like ESG capital that maybe changes the rules to make it okay to invest in what might be better cash flow assets is like the Brookfields of the world. They raise this giant energy transition fund, and I think they tweaked some of the rules to allow them to wrap a transition story around an old world dirty asset. I mean, they were they nearly bought Origin Energy in Australia, which is a big gas producer here in Australia. But anyway, like that's an example, I think, of where you tweak the rules because you need the cash flow to justify the investment, and you can't back solve the returns, building offshore wind farms or anything like that.
Yeah, well, and that's where I firmly disagree with what Teck did in with getting rid of their coal assets. Teck is really, it's a real shame to see these Canadian companies make such big errors. And there's so many opportunities right there for them. They could have gone up to Tumbler Ridge, which is the other major coal region in Canada. They could have picked off, 3 to 4 juniors and picked up monster properties and put them into production. They had been cash flowing like crazy. And but they're of the opinion that we'd rather focus on our crappy copper assets because our big shareholders say we should. And sometimes you need to tell your big shareholders to go stuff themselves and maybe buy another company, and that you're not going to listen to them. So it's a shame to see that.
It's funny, right? Because the part of the justification for doing this is, we look at Freeport and we look at Freeport's multiple, and we want some of that multiple. But the reality of a mining company is there much justification for a certain mining companies trading at a higher or lower multiple than another mining company just on commodity? Yes, that justifies it off mine life, but these are finite resources. It's not like software where you have a growth rate, or it's not like an industrials thing where you have a moat or anything like that. It's literally you are entitled to a set of cash flows over the course of your lifetime, and you should be trying to optimize for the cash flows you're going to get in the door, rather than trying to play financial gamesmanship of getting a higher multiple because you're pure play copper or whatnot.
Yeah, well, can you imagine if Teck took all their expertise in met coal, specifically in British Columbia, in Canada? Like, people sometimes don't know this, but metallurgical coal production in British Columbia, which is a province just west of Alberta, right? And in the west coast of Canada, that met coal revenue covers a lot of expenses for the province. And we're basically, British Columbia is a met coal province, and right next to it is Alberta, and they're an oil province. And then you skip over to Saskatchewan, and they're much more diversified. They have potash and uranium and a whole bunch of other commodities. But British Columbia is very much a met coal province. And what's interesting is we have a lot of interesting people here who have no idea that is indeed the case, but you just have to look at the financials. Met coal generates a lot of cash for it. And I would have loved to have seen Teck step up to the north and and where there is indeed significant infrastructure already, and they already had really good projects. It's a shame they even sold one of their projects to Canuma, which is smaller met coal producer up there. And when they did that, I realized they really have lost their way, and to focus on these crappy copper projects they have is not going to make them a world leader. And it's a real shame to watch a company like that shoot themselves in the foot, frankly, and especially if it's a Canadian company that could be a world leader in what they do, but they're not.
Do you think they got rid of the met coal to make themselves palatable to a Rio to get taken over? It's all part of a bigger plan or not?
Well, I don't think Rio would have cared if there was a bit of met coal in there. They'd have just probably lumped in all their met coal together and spun it out, done something like that if they wanted. But I don't think that would have been unpalatable to Rio. I don't think they were setting themselves up for that. No. But, who knows? You could be wrong. There are quite a number of delusional strategies from time to time. But I cannot imagine. I can't imagine being in the room listening to executives talk about why they spun off, why they sold their coal division to Glencore. But on the other side, more power to Glencore. I think what they did, the deal is fantastic. And I think they're going to make an absolute pile of money over the next coming decades.
You touched on all the revenues that come out of BC, and it's a pretty similar scenario over here in Queensland. And what ultimately happened was that the government just jacked up royalties when coal prices got carried away a couple of years ago. What sort of odds do you put to something like that happening in BC? Yeah,
well, what happened over in your area? That was heard around the world. That's for sure. You never know. We're here I'm in British Columbia at the present time, and I split my time between a few cities in Canada, namely Toronto and British Columbia, and so we're coming up to an election. So it'll be interesting to see who ends up winning that election. It'll be a very, very tight race, and there'll be a lot of drama. So it'll be very interesting. And I imagine if the existing government gets in, it'll be status quo. And I think if another government comes in, it'll be status quo. I don't think they want to kill the goose that laid the golden eggs, but it wouldn't surprise me either that they would get hard, especially now that Teck no longer owns the assets, owned by a big bad foreign company. Maybe they'll but I don't see that happening, because I think they're smart enough to know that there are quite a number of projects that could be brought into production, and to start changing the fiscal terms I would imagine in your region they've killed all new investment in the sector, right?
Yeah, BHP certainly no longer investing in new capital. Other companies are being opportunistic and acquiring projects being divested, but
definitely not building any.
Yeah, I mean, well, you saw Eagle Downs get acquired, which is a development asset, and I imagine the acquirer wants to build something. Bowen Coking Coal tried to bloody ramp up a couple of mines in Queensland and fucking failed horribly. So anyway,
yeah, I'm not sure how the tax is structured, but it will be interesting to see what happens. I have people I know that are calling for $1,000 a ton coal. That could, depending on the tax structure, could really it could change the economics of a lot of these projects.
$1,000 a ton coal.
Jesus Christ! Holy snap and duck shit! They'd be making some money.
Yeah, no kidding. Well, as you know, it hit 600 not that long ago, and yeah, you're exactly right. Most people had factored in. I know that Colonial had factored in a long-term model at $180 coal. So even at 600, when it hit 600, that was pretty exciting time. So it's a fascinating market, and there's going to be a lot of steel made in the next several decades. Especially, well, you just watch India grow. India needs a ton of steel, right? So they'll need a ton of coking coal, and they don't have any in India, right? They're all pretty much they're a thermal coal country, and they need met coal, and they need big amounts, and Canada has big amounts for them. So we'll see what happens.
Yeah, well, big amounts of met coal means big amounts of CRE insurance policies, Trav. Don't you reckon? You got to protect those met coal mines,
mate. Look at what happened to Grosvenor.
Yeah.
Yeah,
but it's not just the coal mines like Grosvenor. it's the service providers and the contractors as well that work at those coal mines, because bloody coal, look, I've been in coal insurance for a while and it's a tough landscape. It's tough.
Imagine if you were like a mining contractor, all of a sudden your services are not required and you're leasing your equipment, you're on the hook for some repayments, you got to pay bloody staff entitlements, you're fucked.
Yeah, mate, but like, it's tough, like you say. Not if CRE insurance are on the ticket and they're sorting it out for you. I'm talking bloody experts in coal insurance. If I asked you, who do you know in coal insurance before CRE?
They're the only names, to be honest.
Who do you know in mining insurance?
CRE.
Yeah, but did you know of anyone before that?
I didn't.
No, neither did I, and I never will, because I actually don't care if there is anyone else, because it's just CRE insurance.
If they care about coal mines, mate, they care about all mines.
Yeah. Yeah, coal is a niche, mining's a niche, everything's a niche for CRE. Get on them.
One of the things we're keen to talk to you about, Warren, was your most kind of relevant and recent views on both the uranium market and our favourite uranium developer, the mighty NexGen. How have you thought?
I wouldn't even class them as developer yet.
Yeah, you need a permit first, right?
Buddy, with the way you explained it, I like, because you've been in since sort of $15 uranium price, saying that, all these Super Bulls that have come around now are like, it's like rocking up to a party at midnight in the night and it ends at 2:00. And why rock up then? But the way I've come to peace with it is that when I ever went to a party, that's when I did some of my best work, was at 12 to 2. That was the time for execution at a party. So
well, I've heard you get better looking after 12.
Yeah, everyone does. Everyone does. It's magic. So it's like, but it's more like, I know, listen to your potty you did the other day, YouTube video you did the other day, and talking of, the Super Bulls, thinking it goes to bloody $200 a pound. But it's, I think, and I don't know I'm sure all the Super Bulls understand, even if it did go to $200 momentarily, how freaking irrelevant that even is, because not every fucking mining company selling it at $200 a pound, and it's essentially a bit of an irrelevant market, the spot one. It's more just a guide of sentiment. So once it gets to 120, 130, I'm out. But I don't know. Take us through the thesis, mate.
Well, part of the reason I think we have a bit of a Super Bowl culture in uranium is because, without a doubt, there are some significant people in all the chat rooms and everywhere which are actually being compensated by uranium companies. So they're just pounding, bullish. Not to name names, but you mean the guy who's been pumping fission for 10 years and it's actually got taken out lower than it was 10 years ago? That guy? Yeah. Well, we don't know. I don't know if anybody knows who he is or who he's compensated by, or if he's compensated at all. I don't want to make any. And the whole uranium cycle, rarely do you see people as crazy bullish on a commodity as you do in uranium. And I'm not sure how much is true and how much is really just crazy paid individuals that are being paid by the uranium companies to pump it up and try and get retail to buy it. I did see a high level agreed back in the mid 90s, right, with Bre-X when that happened. But this whole uranium is probably the closest thing I've seen to it. Then, because have you guys ever seen any commodity pumped as much as uranium is these days? It's just crazy, I find. But anyways, my thesis is quite a bit different than a lot of people's. Again,
you weren't living in Perth, Western Australia, in last year's lithium boom.
Lithium last year, fuck me dead.
Oh, lithium, yeah, sir.
Bloody mad.
Yeah. So, anyways, as you may know, my claim to fame in the uranium market, and why anybody would even want to give 2 seconds to listen to my views, is I was bullish on uranium back when it was $17, and I made $90 million trading NexGen, and I invested in NexGen when nobody else would. And I did an ore model when in the early days before the official estimate came out. My model was exactly bang on, and I released it 3 months before the official one came out. And all the analysts were against me, all the investors were against me. The price was crap. people thought I was crazy, and I did really well. And I was one point the largest shareholder in NexGen. So here we are today. Now that uranium's gone up 5 times, with the help of significant speculative, possibly market manipulation action in the very narrow spot market of the entire uranium market, I estimate maybe 120, 130 million pounds have been taken out of the market the last few years. And when I want to take the piss out of the super bulls, I go, guys, come on, you've yanked 130 million pounds out of the market, and the spot market nonetheless, and you've only been able to get the stock to $85. Are you kidding me? So anyway, so that's where that's one of my thoughts there is, despite all this market manipulation and the hedge funds buying uranium, they can't seem to get it anywhere near where it was before. And then they get the bulls saying, oh, $200 uranium, if you take the 138, which was the high of the last cycle, and you inflation adjusted, you get to $200. I said, well, I used to know the number right off the top of my head, but if you look at the small amount of uranium that traded at 138 at the very, very peak, and then you want to inflation adjust that, are you absolutely crazy? And then, I know the supply side reasonably well, because was involved in the last cycle. I was involved in extract uranium. We sold that, the Husab deposit, to the Chinese, and I was involved in the early days of both GoviEx and Global Uranium, and some others in the last cycle. So I've been around the block a little bit here, and what I'm seeing right now is significant speculator interest in spot uranium, which is a very small and liquid part of the uranium market. They've jammed the price up to 180 to 85. Every project that I know of in the world is economic at 85, except for these projects where these guys have the science to take it out of the seawater. So there's a lot of uranium coming at us because there's a lot of uranium out there. A lot of uranium was found last cycle, right? And then the other thing that is really important on the supply side is, I believe we're going to get Sweden lifting the moratorium on uranium mining. And of course, Australia, I'm not sure where you guys are, your thought process on that, but it would make sense at some point if you want to get with the program globally with the non-CO2 generating baseload, that Australia, which has some of the biggest, if not the biggest resources in the world of uranium, would lift the moratorium there. And then there's also countries in South America, like Brazil's a monster country with lots of uranium. So there's lots and lots of uranium around the world, and at $85, they're going to make lots of money. So what we have here, the bulls are talking about there's going to be a short-term spike in uranium because, because money hasn't been spent on mines. It's going to be a while before NexGen gets into production. And during this window, there's going to be a big shortage of uranium, and it's going to spike it. And I go, okay, well, it's really just a supply side issue, because on the demand side, they're not building reactors super fast. And of that 450 existing reactors, or 440, whatever number you want to use, a lot of those reactors are old and they'll eventually be decommissioned. I know a number of them have been extended their lives, but so I don't see any more than low single-digit growth in demand for uranium. I see every project I know globally is economic at 85. So there's this window here, is whether or not the speculators could jam the price of uranium up to make some money. And, they've already thrown billions and billions of dollars at the spot market through spot, yellow cake. Spot's 65, and yellow cake's still around 25 million pounds. And then you've got all the speculators who've lodged all the uranium at ConverDime. And if I get into a conversation with somebody and say, well, there's going to be a big shortage of uranium and this and that and the other thing, and I go, well, one stroke of a pen banning, private ownership of uranium, which I think is, frankly, it's ridiculous that people could privately own uranium anyways, would make a lot of uranium come to market pretty darn quickly. So I'm happy to leave the uranium market. I only have one really significant position in it, but the uranium's gone up 5 times. I made $90 million on NexGen. I'm out of NexGen now. I have one last uranium investment, but I'm quite content to ride that one for the next little while. But I'm not a Super Bowl, that's for sure.
Before we Yeah, before we get into NexGen, talking about like, oh, ding, ding, ding for me, I do hold sput. But it, like, say the DOE did do that stroke of a pen, as you said, and said, right, you force majeure, you have to sell all your bloody uranium, your 65 million uranium pounds into the market, and did the same with yellow coke. How would that happen? Like, would they have to sell it at a premium, or would they be forced to sell it at the prevailing spot price? How would that actually work?
No, I think we're a ways away from that, so it's just purely speculation. The precedence that has been set, with a couple things in obviously, private ownership of gold was banned. I think it was just in around getting off the, what was it, in the 1920s, 1930s, it was banned. And then, they have a habit of banning things when anything's in short supply, or it meets their desire politically. For instance, I remember a hit I took when I was short Morgan Stanley, and the U.S. government, you'd never think this would ever happen in the good U.S. of A., but during 08, they banned the short selling of financials. And I was short Morgan Stanley. I thought they were going bankrupt. And boom, the ban happened. I had to cover, and I got jammed. And the same thing could happen with all these guys who are long uranium. And if I was, at the Department of Energy, and I had like five nuclear power utilities sitting in front of me on my desk, and they're all complaining about uranium being squeezed by a bunch of speculators, and one stroke of a pen could fix that problem pretty quick. And then before you know it, NexGen will be on stream. Plus, by that point, there'll also be significant expansion going on at all the major uranium mines who can expand. They'd be stupid not to expand here at this level. So, anyways, I'm not calling the death nail for uranium, but I do know long term, there's no way long term uranium is going to be $85 a pound, right? It's going to be much lower than that. There's just too much uranium out there, and there's too many guys could make money at $85. So I'm not a Super Bowl, and I'm optimistic. I'm a fan of nuclear energy, and we'll see what happens.
I think so. Sput and yellow cake. Do you view them as a speculator, like the pure aim to try and manipulate the market by holding pounds? What do you think their role is?
Yeah, well, that's what happened last time, right? The last cycle, I think there was significant manipulation going on. And early this cycle, back when it was $17, I was saying if I was a hedge fund with tens of billions of dollars, what I would do is go out and buy all the major uranium players, Kazatomprom, Cameco, and NexGen, and possibly some more juniors, and then I'd start manipulating the price of uranium up, and I do it through the spot market. And so there you go. And then the other risk to the uranium market here too is I don't know how many tens of millions of pounds of uranium have been picked up by speculators, and the speculators may or may not have had a good run at it. If they bought it at 40 or 50 and now at 85, maybe they'll say, listen, we're ready to move on to another one. So you'll see tens of millions of pounds coming out of ConverDyn without even, like, I know Sprott Uranium Trust has no mandate to sell, but certainly the hedge fund speculators can indeed sell the spot uranium they picked up lower levels, and I don't know how many tens of millions of pounds. The only indication you get here is MMCap, not a super monster hedge fund by any means, out of Canada, sold 2.7 million pounds to NexGen, right? So if that fund had 2.7 million pounds, you got to think that some of the big guys out of the US would have quite a bit more. So I don't know what that number is, but anyways, I think there are enough warning signs here that I'm not a Super Bowl, that's for sure.
So with NexGen, considering you'd say you did one of the first models for it, you went on the journey with them. How do you now look back and look what's happened in terms of how that business has been run?
Yeah. Well, I have a couple of rules of thumb in the business. One is of course, juniors don't build tier one mines, right? And I've only seen it happen once in my career that I could think of. You guys may have recall an example or two, but like if you've got a good project, you are not allowed to build it as a junior, and you shouldn't build it as a junior, and you should be bought out. So the biggest question I have is, why hasn't NexGen been bought? And people are saying, well, Warren, they're not going to get bought until they get the permits. And I said, well, majors aren't afraid of permitting in the number one mining jurisdiction in the world, which is Saskatchewan, right? It's not something that ever comes up because it's so easily permitted. So I do not know. I have some thoughts as to why it hasn't sold, but NexGen hasn't sold, and it should have been sold. And then the most disconcerting thing I've got is another rule of thumb I have, which is the iceberg theory, right? Which is, you look at what's going on publicly, namely some of their extravagant spending. And we're talking a company that doesn't even got a permit yet, let alone starting to build a mine, let alone cash flow generating in production. So I remember the first time, you're probably aware that NexGen sponsoring both an NHL hockey team and a Formula One.
And the watches.
I remember seeing that. I remember watching a Vancouver Canucks hockey game once, and I saw NexGen on the side of the helmet, and I go, oh shit, the NexGen hearing aid company must be doing really, really well to actually sponsor the Canucks. I never thought in a million years that a commodity producer that produces one commodity that where you know all the stupid buyers, that you somehow sponsoring the Canucks for $3 million a year is going to help you in any way. But then there's stories about, it's going to help with the Indigenous relations and going to, like, we're talking Saskatchewan is like a couple of provinces over and they don't have an NHL hockey team. I thought what they did by sponsoring the Saskatchewan Roughriders football team was a stroke of genius. So I said that was the first sign I was getting that they're getting off track. Then the Formula One happened, and that's roughly, I'm not sure, I've heard the numbers bantered around 7 million per year for that. Not sure if it's 7 million Canadian or US, but let's say it's 7 million Canadian. Well, you combine that with, and like try and justify a Formula One, right? Like Formula One for a single project commodity producing that's not even in production, doesn't even have permits, is sponsoring a Formula One team. Are you fucking kidding me? Like, so that's $10 million a year additional overhead for a non-revenue producing company that hasn't even started building their stupid mine yet.
And you can't say the sponsorship's prevalent on an F1 car either. It's a tiny fucking logo at the front. You wouldn't even know. The only reason we know is because it's been so publicly portrayed about how stupid it is. It's not because we've seen it on the Formula One.
Yeah. So then they went and pulled this deal by buying all this spot uranium from MMCap, and I'm just going, oh my God, what is going on here? So
straight after they did an equity raise. Days after they did an equity raise in Australia, which and then it went down, and it absolutely pissed off every insto that tipped into that over here.
Yeah. So you're exactly right, and so that if you look at those numbers, that works out to just the interest alone. And sure, they could pay some of it in stock, but all right, they're looking at $31 million incremental interest costs per year, Canadian. To buy that, to carry that 250 million US debt at 9% works out to 31 million Canadian. So if you tack on the hockey team, the Formula One, and this friggin', as if they need more debt, that's like 100 and like if you divide it by 250, let's say 250 days a year, working days a year. That's $167,000 of expenses per day.
Jesus.
Like, and people are then if you actually take a look at their expenses and divide it by the number, like the last quarter, and divide it by the number of days in the quarter, like holy Jesus, you compare that, you look at the incremental costs to their already rather large overhead, and you just go, these guys are firmly off the correct path.
My favorite. I spent half a day looking at their financial statements over history once, and mate, I couldn't believe for the longest period of time they've taken a good chunk of their corporate overhead expenses and capitalized it as exploration. Like what? And they've continued that trend. It was of employee stock compensation. They've capitalised that as exploration expenditure. I mean, of course, it's the stock compensation to employees which has been completely
So then you take a look at directors' compensation, executive compensation, the options plan. I remember years and years ago they pushed to like in Canada the standard is 10% of your float could be issued as options. And I remember NexGen had some reasons to say, okay, well, let's take it to 20. So this is like without precedence from what I could tell in my experience. I'm not sure if that's still the case, but there was a sign early on that they were going to be pigs on the options, right? So then you look at the other concerning thing too is just take the number of years they've been in existence and divide it by the number of CFOs they've had, right? And that number is not a pretty one. So
wait, look at the current CFO. He's got no fucking project finance experience. He's got an he's an accountant kind of guy who's just like been there a few years, but zero project finance experience. And you're supposed to like coordinate project finance for the world's best undeveloped project. What are you fucking doing?
Yeah. And then I hear like this. Anything I've ever told you here is, you can verify publicly except for two things, which was the Canucks sponsorship, but I have enough friends in Vancouver who know how much Canucks sponsorship costs, and Formula One. I have some friends in F1, so I'm winging those numbers, but everything else is just go and figure it out yourselves. And so my iceberg model, I'm not sure if iceberg model is prevalent in Australia, but basically, 1/9 or 1/7 of the iceberg is poking above the surface, but the real shit is under the water. So that's the question, right? Is how much, like if this stuff is public and anybody could find it easily, if this is shit that's going on in the public domain, what's going on in the non-public domain? So I guess you just take it right from, they're definitely off course. I don't think juniors should be building mines. And the question then is, why haven't they been sold? And then, you look at and then the other warning sign I always get too is these weird metrics they're using. They're saying our expenses as a percentage of our market cap. And I'm going, who else in the world uses that? And what was the other? There was a real other nutty one. They're going
per pound of uranium discovered. That was it.
Yeah.
All right.
Yeah. My favorite one recently is look at our cash plus uranium. What are you adding uranium to your cash for? Like, it's just like to show their level of liquidity and going, oh man, are you guys getting off track pretty fast? So, and is the board should be ashamed of themselves, and they should be reining a lot of things in to stop the stupidity from happening, because it's kind of like, you're given a golden goose, but not necessarily a golden goose. You're given a golden gosling, right? And you got to nurture it and grow it to the golden goose. But if you're milking it, the little gosling so much and so badly right out of the gate, it's not gonna be a good long-term situation. And I think it's not, they're not doing the right things, and nobody's saying no to Lee and the management team on all this overhead and spending and compensation. And the reason they're not is just look at the director compensation. Like, directors are making tons and tons of money, so why would they ever want to ruin the party? And so when somebody wants a Formula One sponsorship, sure, why not? We got lots of money. We're starting to believe our own bullshit that we got the best project in the world and all that sort of stuff. And then you have management talking about, we're going to be a $30 billion company. And I said, well, how does that math work? Like, oh man. So I don't agree with that math, but they're, and the thing is right now is it's kind of good times for NexGen, because if you want to be a speculator and play the uranium market, you want to play Kazatomprom, Cameco, and NexGen as the big liquid players. And a lot of people won't play Kazatomprom because it's, where it's located. So you're playing two players. You're playing NexGen and Cameco. And those people, if they're just playing it for a year or two, or just for whatever, as a trade, they probably don't really care what's going on. They don't care if there's like 10 Formula One teams being sponsored, and they're in it for a shorter period of time. So there will be a day of reckoning for NexGen when somebody actually is a shareholder actually cares. I don't know why Li Ka-shing left. I imagine, knowing a little bit about him, he's kind of like the Warren Buffett type. He doesn't like excessive,
Their largest shareholder now, Warren, is L1 Capital, which is like a pretty great returns, activist hedge fund here in Australia. Activist.
But there's enough to be active about. But Li Ka-shing, I think, would be not exactly super happy with some of the stuff going on here right today. And we'll see. I think the day of reckoning comes where somebody will have to give them a bit of a wake-up call if they don't give themselves a wake-up call. So it's a shame to see that, because I've known Lee since the beginning, and he was a good, decent guy and working hard, watching the pennies. And then over time, you have the right road and the wrong road, and they're kind of they're missing it. Because, let's say they're actually going to build this thing and they're not going to get taken out. And it's not an easy task to build a mine. And juniors generally don't make build tier one mines. The only one I'm aware of is Cisco. And I think, I haven't spoken with John or Shaun about it, but I would think they would have rather sold prior to building the mine and not wanted to waste 5 years of their lives building a mine. But let's say Lee is actually going to be building a mine here. You would want to be 100% focused on building the mine, not speculating on the price of uranium through, I can't see where they could justify buying, 2.7 million pounds of uranium. It doesn't move the needle on the amount of production they're going to have when they eventually get into production. So I have no idea why I've heard explanations from people as to why they did that, and I still can't figure it out. I can't figure out the Formula One or the Canucks. So you got to they're in serious business here, man, because they've got to build a mine. And when you're building a mine, you got to be focused on building that mine. I personally would have sold it before I'd have to get stuck building the mine, but they're going to build a mine. They're building a uranium mine. It's going to be a significant world-class uranium mine. You've got to build it. And, they're going to be hiccups along the way. And I've watched Cisco, the only other junior I know that's built a world-class mine, and they had a big plant fire, burned up a bunch of stuff. And building a mine's not an easy thing to do, especially when you're dealing with the added, like, for instance, if you were building a uranium mine, which would you rather build? An open pit low-grade uranium mine or underground high-grade, right? And the whole issues with gamma radiation when you're underground with high-grade uranium, there's going to be a lot of issues to deal with and a lot of challenges over the years to get that thing into production. So I can't believe they're so distracted with things other than building a mine. So
you said the question is why they haven't been bought. What is the answer?
Yeah. Well, I hear things, and I hear of people wanting to buy them. I'm sure they've had discussions with the company, and for whatever reason, nothing's happened. And I haven't been in those meetings, so I don't know. And do I want to comment as to why I think they haven't? I'd rather not, frankly. But I think I'll be in enough shit as it is for stating publicly available information.
Oh, it was worth a try. We refer to it in Australia as the soft issues. May it be something like that.
So, Matty, why don't you think NexGen has been sold?
The soft issues.
Plus, I would also speculate that they've always had these like chunky convertibles in there, which give like disproportionate, voting alignment to the board, which is AKA let's keep the party going for ourselves as long as possible.
Yeah, that is a concern. Is entrenched management for sure. So, but anyways, they have some challenges ahead, and do I believe they're going to get to a $30 billion market cap? Absolutely not. Just work out some math. Out the math. It's pretty straightforward.
Yeah, well, my view on it is, and I've said it before, is that like when you find a world-class ore body like this, just because it's so bloody good doesn't mean that the ore body should be disrespected, and that's what they've done to it by running the company the way they've done. And it's an insult to the mining industry, and I fucking love mining. So
yeah. It is indeed. I think those two statements are exactly correct. An insult to the mining industry for the people who work hard, scrimp, save, custodians to their shareholders' money, and then when you do find the goose that lays a golden egg, which I believe they have done, to disrespect it by not optimizing and make sure every nickel that the shareholders deserve get to the shareholders is disrespecting it. So
I see it as like management doing their absolute best to turn a tier 1 deposit into a tier 2 one by having the world's worst capital allocation I've ever seen in my entire life.
Yeah. Have you seen any? Can you draw any parallels to this NexGen journey to anything else you've seen in your history, and how that actual history panned out?
Yeah, there's one, but I'd rather not say.
I can't wait to turn the cameras
and
off.
that's why I'm concerned. That is why I'm concerned here, because I could give you some hints on it. One is, I think what...
Oh, Briex, it's his story.
Yeah.
Anyway, just give the hints then.
They've got the deposit. You know, nothing's changed from when I looked at it. It's a tremendous deposit, tremendous jurisdiction. But, you know, they're now listed on the NYSE, right? So the SEC and the Americans, they don't take these types of issues too well, right? And there's a rich history of shareholders in the U.S. not liking this type of activity, and we'll see what happens.
Yeah, I reckon. I reckon the complete polar opposite to NexGen after what you've said, Warren, is DSI. Complete polar opposite. Like the only similar thing, they're the golden goose of ground support. Like, you know, Arrow's the golden goose of uranium mines, but everything else, DSI allocate their capital wisely to expand the ground support business. They only spend a small amount on marketing to get us to tell the world how bloody good DSI is, which is an absolute no-brainer because we have actually become stewards of the DSI business as a result of this.
I go to sleep hugging a bolt.
Yeah. Yeah.
Never used to do that.
No.
I dream about ground support.
Has anyone ever done that?
Never used to do
now.
that.
Yep. Exactly. They're the best at making ground support for the world. I think that they've stayed in their lane. I think NexGen need to do the same. Just build a bloody uranium mine. Stop wasting millions on friggin' sponsorship deals. And look, actually, I vote for Derek Hurd to become the next CEO of NexGen.
Yeah, I back him more for sure.
Yeah.
Yeah.
Get it off your chest, Trav. What else have you got? Like,
I didn't even have to be grumpy in this episode because, you know, Wazza did it all for me.
Yeah. And DSI can do it for everyone else too. Go DSI and Jesus Christ, go Australia.
I reckon it'd be awesome to get a couple quick takes on some commodities I haven't heard you speak too much about. I know you love the sort of hated space, the contrarian commodities projects and these sorts of things.
Yeah.
So is tin a space you've had a look at?
No, it isn't. No, I do know some smart people who've loved it. But at the time people started loving it, I didn't have really the bandwidth to get into it. The hated commodity I like, well, in addition to met coal, I love nickel sulfide right now. It's definitely hated, and I like it. And
last time we spoke, you were pretty fond of premium nickel with their project.
Yeah. I think they're sitting on a monster discovery of nickel. And you know, I've done a bunch of podcasts on it, but the quick and dirty, they have one structure goes like this, one structure goes this. It's got a 3 kilometer strike length. This structure and this structure has been mined, so you know what the grade is. Downhole EM, which is extraordinarily good at finding nickel, indicates there's a 3 kilometer that confirms that there is a 3 kilometer strike length, and we just basically need to punch a few holes into it. And I believe in time, drilling that 3 kilometer strike, there'll be many, many tens of millions of pounds of high grade nickel copper ore. And they've already got some shafts, a lot of infrastructure permits. It's in a great mining jurisdiction of Botswana. The
My
risk
best mate grew up in Celebi.
Pardon me, you did?
My best mate grew up in
Salibe.
Salibe. Yeah, I can't pronounce it properly. I've been there. I've driven there. Yeah, went there with him. Yeah, it's nice, good town. I mean, it used to be better back when the mine was running, but it was pretty
Yeah.
beaten up when I went there. But yeah, Botswana's good.
So so it's the risks there, of course, are getting the story out, capital structure, having a historical mine like a brownfield situation. There's a lot of there's a lot of additional overhead, which would, like, for instance, keeping the lights on and keeping the shafts in good repair is not cheap. Things like that, which would saddle them with a little additional costs that would normally not be the case with an exploration company. But there's some lot of good things. I'm hoping near term we're going to get some sort of strategic investor and possibly the U.S. government stepping up. So that should little by little they're going to get a maiden resource estimate out at some point. Hopefully we'll get a strategic over the next little while. Hopefully the U.S. government will finally step up. They did. I'm not sure if you noticed, they did an interview indicating their support for premium nickel. So we'll see. I think little by little people will get to know this story. And I think it's what's hurting them right now is just trying to raise capital to do exploration is really, really tough, especially in the mining sector in general, but especially in nickel, right?
What did you think when, we've recently seen, 70,000 tonne of nickel sulfide being curtailed or about to be curtailed from BHP's Nickel West shutting down. And it was funny seeing there wasn't really a lot of the equities, other sulfide equities went down. But is that, what do you think about that? Is that probably a positive sign for your nickel sulfide thesis? I assume it has to be if supply's been taken off the market.
Yeah. I'm not familiar with do you guys know off the top of your head what the grade is?
Oh, for BHP's operations?
Yeah.
I think fucking Mount Keith's sub 1.
Pretty low?
Pretty low.
Sub 1,
and they're not high. Leinster and Mount Keith were both low iron ratios. So they needed the stuff down in Kambalda to be mined to lift the iron up for the smelter to get it to that 4 to 5 level. It wasn't really high quality nickel either. So historically the Kambalda stuff was 12 to 14 iron to MgO ratio. I think Centaurus is about 7, whereas Leinster and Mount Keith were much lower, so they needed to blend it and do some tricks with the con to get it up.
Yeah. And well, obviously premium nickel has much higher grades and already has a shaft and things like that, which are definitely helpful. But one interesting factor that I've witnessed, and it's publicly available too, just due to the support the U.S. government's giving us. We had a podcast actually with the CEO along with the U.S. ambassador to Botswana, indicating his support. Is with the Chinese control of the nickel laterites in Indonesia, I think the U.S. government in particular is looking for world-class nickel assets to make sure they're under Western control. And so there's significant interest in this project for that reason alone. Is just a strategic nickel resource, and it's a world-class nickel project in my opinion.
You're also a shareholder in Solgold, last time I heard, and
that was via Cornerstone. Then they merged. Is that right?
Yeah, that's right. Fortunately for me, I bought a whole bunch at 8p, I think it was, or in around that neighborhood. And I think I sold half of it at 40 to 50p. I made the mistake of continuing to hold. We rolled our shares into Cornerstone, and I still own a bunch of shares in Solgold. So I am a shareholder. Fortunately, I took a bunch off the table in 2017. So my quick and dirty on the stream is it just shows how tricky it is to raise money in the markets, and that and you combine it with you've got strong technical expertise of the streamers. saying this is a fantastic project, we want to be part of it, yet the market's not there to put up the capital to do an equity raise, right? So the streamers are there. It's a strong technical project, so we'll see what happens here. I think in the news release, they indicated there is a significant ability to buy back some of the stream. So we'll see what happens over the next 6 months to a year to see whether there is a significant player who wants to step up and put this into production. What's fascinating about Solgold that many people aren't aware is not only is the Cascabel discovery there, but also Nick Mather, who many of you I'm sure are fans of, managed to actually lock up a significant amount of exploration ground in Ecuador. And as you know, it's on a long trend along the copper trend in South America. It's way underexplored. Plus, so not only do they have the Cascabel discovery, but they also have significant exploration discovery too, exploration properties along the way. So
we know Gina Reinhardt, our beloved billionaire here at WA,
loves Ecuador.
She's been putting dollars to work in Ecuador lately.
Yeah. Well, yeah. I'm sure I can't say too much, but I imagine she's probably taken a look at Solgold. Don't know if she has or not, but
yeah. Well, the thing with Solgold that always kind of confused me was when they pulled the trigger on the royalty and pissed off both Newcrest and BHP on the register. I saw that as completely fucking unnecessary. Like, you know, like you say, like juniors shouldn't finance their own project. It should be taken over, and then you put a royalty on it, and well, heck, you just reduced your probability of being taken over.
Yeah, I know you're exactly right. And I think at that point in time, I wasn't that involved in the company at the time, but I think in that point in time, there was quite a difficult relationship between BHP and the company. And I think the animosity has settled down quite a bit. But yeah, I don't think you go and strap on a royalty without, giving a friendly heads up to your major shareholders. So that may have poisoned the well a little bit for sure. But, just speculation on my part. I wasn't involved in any of those discussions. But I would imagine, if I was at BHP, I would not have been happy to have had something that significant done to an asset I had a strategic position in.
No, especially royalties on such long life assets, because the value destruction is just phenomenal, huge.
Yeah, well, I remember one of the mine plans I looked at had a 60-year mine life, right? It's a pretty significant asset. So, yeah. And what do? You just and today, it's not as if the financing window is open for a lot of these juniors, even with discoveries. And so I applaud them for doing the streaming deal. And we'll see what happens here over the next little while. It's interesting too. Like you're dealing with, when I see a lot of these non-market participants starting waving their arms and saying, well, copper is the future. You need copper for everything, copper for cars, copper for electrical infrastructure. And then you see an outstanding project like Cascabel just sitting there with no takers. Not no takers, but you know what I mean? They're not, there's not a dozen mining companies all fighting for the opportunity to put it into production, let's put it that way, or we would have seen a bid by now, right? I just find it baffling, frankly, that Solgold hasn't been picked off here by somebody who wants to put a big copper mine into production that's, will run for many, many decades.
Has BHP and Newmont got their foot on it, but like, would Gina Reinhardt be able to take it with all those players at the table already?
I'm okay. I'll tell you my opinion. My opinion is, I think if you look at the number of people that have large shareholdings in it, there's a significant amount of the stock under control of both management and large shareholders who I think would be supportive of a sale. So when that day comes, BHP would need to make a decision. What's interesting about this BHP situation, I remember I was Nick brought me over the wall way back when about getting a major in. I said, Nick, please don't get a major in. Don't get a major in. Oh, gets a major in. Having somebody like BHP, well, yeah, having BHP as a shareholder scares away a number of people, right? Because they say, I'm going to do all the work and do the due diligence and then make a bid for your company. And then if BHP wants it, they'll just top it, right? So it harms you in some ways. But right now, I would think that if you added up the shareholders of all the major shareholders who I think would be interested in working with the buyer, I think you could probably get a pretty significant percentage of the shares, probably 35 to 40. And so that would be a pretty significant block voting for you. And I'm sure there's some other mechanisms that you could do to make sure that a bid is successful. So I think Solgold could crown a winner if there is when that winner steps up and wants to get real with things. I think, but then worst case scenario is there'll be additional bidders stepping up to the table, but we'll see. It's so difficult to predict what would happen with Solgold here, frankly, and even after having watched it for as many years as I have, it's going to be difficult to predict how it ends up and who ends up owning it.
Very interesting. Nah, good chat, mate. I think you got anything else, JD? Well, you got the legend on the line.
We've hit all the notes. Appreciate you making the time. Good to chat again, Warren. Thank you.
Gentlemen, very nice to chat with you too, and good luck with everything.
Thanks, Warren.
Beautiful. God, you and Warren Irwin are good together. Trav, he's your type of guy.
Oh, he's got a funky investment style. He's hyper concentrated and only undeveloped projects. I couldn't invest that way, but he's got a knack for it. But he doesn't mind speaking his opinion, which I like. I like the ability to just be a bit punchy, a little bit. Yeah.
Well, imagine, Trav, when you're older, and when people get old, they really don't care what people think because they're at the back end of. Anyway, not that Warren's that old.
Yeah, imagine how much.
When you get old,
I'm gonna be a grumpy fucking old man. That's for sure.
Jeez, you are gonna be brilliant. I can't wait for it. I'm here with you all the way, Cobber. Oh, mate, speaking of horses, here with us, our bloody beautiful partners, Axis Mining Technology at the top of the show. North American people. Axis aren't just Aussie, they're bloody North American. And remember, call the bloody number in the show notes. Old Shaun, you get a free trial. Just say money of mine.
Sort of.
Easy as that. Mineral Mining Services, the bloody gun mining contractor. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance. That's all you need to know is CRE Insurance. That's it. WA Water Bores, K-Drill, and I don't think we had a Spark chart in there today.
You Spark.
But if we had a chart, it would have been a Spark.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.